Hi, everybody, and welcome to the Wendell Effect. My name is Brandon Wendell. I'll be your host as I guide you through the markets, or at least my view of the markets. We'll go ahead and get started here and shrink me down and jump into it. Just a reminder, we are not broker dealers or investment advisors. We're looking at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities or giving any personalized recommendations, and past performance is not indicative of future results. We're also not subject to trade restrictions, so we can have a position of security and initiate one at any time. Keep in touch with me, please. Email me at bwendell.cmt@gmail.com. Hit me up at TraderBdub on Twitter and follow me there too. Got a lot of good information I put out on a regular basis. And you can also obviously find us here on YouTube for the Wendell Effect. So today we're going to go ahead, and before I get started, I want to have a special announcement. I'm going to be doing a live holiday or year-end special, and that'll be on December 20th. So make sure you tune in. I'll give you some more details next week with the time and all that stuff, but keep it on your schedule that December 20th will be a live version of the Wendell Effect coming up. So for this week, we're going to do weekly market analysis, looking at the equity index futures, moving into energy futures, sector analysis, and there we'll jump right into it, I guess. There we go. I went too fast. But just those three for this week. So for the week of December 4th, the equity index futures. The ES has pulled back quite a bit. Actually, all the markets did. We've been in a rally since basically October 14th. We've had this big move to the upside going on. And as you can see, that we've retraced more than 68%, 61.8% right there. Fib retracement, we're almost to 78.6. We haven't quite gotten through all that selling pressure yet, at least not on the ES. We're also not in bullish territory. So we're still in a bear market. We're still making lower highs overall and not into bullish territory. So I do think we have not seen the bottom of the market yet. And the Santa Claus rally, I don't know. I think that came a little too early. We'll see. And you take a look at the daily time frame and the momentum. We had a big move up early in the middle of the week, actually, with the Fed. Really, Jerome Powell's speech where he talked about how they're going to, the economy's going okay. They may not have to do a bunch of rallies or more rallies. More raising of the interest rates, and therefore the markets took that as a good thing, and they rallied. Then we had some bad news. Not necessarily, it was actually good news, but it was taken badly on Friday with the GDP number, or not GDP, what was it? It was, non-farm payroll numbers. Yeah, beginning of the month. Sorry. Got my dogs right here trying to lick my legs. Anyway, you want to say hi, Lucy? All right, there we go. There's Lucy on camera. Pascal's getting jealous now. Anyway, so continuing on here with the analysis, as Lucy is biting my hand. Basically, we had that reaction. It's bullish, though. So it is suggesting that we're still going to go higher, but we don't really have a whole lot of momentum. The momentum is kind of dying off just a little bit in comparison to what it has been before. Okay, getting licks here. On the 4-hour chart, and we're still seeing lots of bullish pressure. Really, what we do is we were pretty much going upwards, basing, upwards, basing, upwards, basing. Now we just did an upwards, which means we could see more basing this week. So not seeing as much bullish pressure as we've had. It is dying off just a little bit, but overall still relatively bullish in the markets. We'll see. As far as the markets, the leader is not the ES. Even though I was looking at the ES, it's actually number 2. The strongest market has actually been the Dow, and that's our leader to the upside. Believe it or not, UNH, which is the heaviest piece of the Dow, United Health Group, was the most bullish of the most bulls. So that's the one that's been leading us to the upside, and the reason why the Dow is much stronger than some of the other indexes. So the NASDAQ is our weak index, and that'll be the one that leads us downwards once the Dow gives up. So taking a look at the NASDAQ, you see how weak it is. Remember, the ES had retraced over 61.8%. Meanwhile, here, the NQ hasn't even gone 50%. And honestly, the Dow going up is kind of weird that 30 stocks are dragging the markets to the upside. It's only doing that because of the psychological effect of a bigger number. People don't follow the S&P as much as they do the Dow because it's a bigger number. That's all. So that's why we love American football instead of real football, right? I'm going to get some flack for that comment. But anyway, football, the World Cup, you get a 1-0 result, and that's a good result, and that's very common. Meanwhile, in American football, we want to see, 42-36 score. So again, that's why the Dow is much more exciting, bigger moves, higher numbers. But the NASDAQ, S&P, and Russell are better representations of what's really going on in the economy, and they are weaker than the Dow. So the economy is weaker than what we might be seeing, so to speak. Anyway, this is going to lead us to downside a lot weaker. You can see on the weekly chart, even the daily chart, barely trying to fight to get into bullish territory and is bouncing off that 50% retracement. We did finish with a lot of bullishness this last week, so we may see a new high before collapsing. And that's only because, again, the Dow is dragging everything to the upside. So if the Dow is done, then the NASDAQ will be one of the biggest and first to fall. Looking at the 4-hour chart, we're bumping up against this little supply here, but we do have enough momentum after a small retracement that we've already had that we should be able to get through and maybe push up towards 13,154 this week. So if that bullishness continues, again, if the Dow allows it and drags everything upwards, then we're probably going to see the NASDAQ go to that 13,154. Speaking of the Dow, here it is at the weekly, making a new high. So we have broken the downtrend, although on the weekly chart, we did not close above 60 as of yet. So we're still seeing a little bit of residual selling pressure here. We haven't fully gone bullish, although we did break the downtrend. We're not in an uptrend because we need higher lows and higher highs first, but we have broken the downtrend by making a new high here. On the daily chart, we're supposed to possibly pull back a little bit. I mean, we did have a negative divergence here where prices made higher highs, indicator did not, so that suggests a bit of a pullback coming. And, well, the supply zone that's nearby has already been tested at 35,654. So I can't imagine that we're going to get much more. I mean, that's not really going to hold it down. Let's put it that way. We could see, again, a little more push upwards, but we just have to see if this was the retracement we're getting or if we're going to retrace deeper. What it'll tell us is on the daily chart, if we break Friday's low, then we go deeper, probably down to 32,000. If we break the high of Friday, then we're likely to make a run to the 35,650. So on the 4-hour chart, you can see we did have a divergence. And again, we've had a pullback already. We couldn't get below 40. So that's suggesting that we are going to continue to make some new highs in the Dow. And like I said, therefore, the other markets are likely to continue to push to the upside with it. On to the Russell. The Russell also did not retrace very deeply. It's about 61.8%. I don't have it on there, but the weekly chart, you still see we're contending with that selling pressure. We haven't pressured up against that weekly supply yet anyway. So still in bearish territory, making those lower highs. I know. You're a good girl. She's staring at me. Anyway, I kept that green screen and kind of cuts in and out with her. But on the daily chart, here you can see, again, we're having struggles getting into bullish territory, meaning the RSI going above 60, and that's bearish. So once more, it's kind of waiting to see what the Dow does. If the Dow goes higher, this will go with it up to 1994. If the Dow fails and starts to find some weakness, then the Russell will probably drop very fast and try to take over with the NASDAQ to the downside. 4-hour chart, not really giving us much. Again, we've been below 40, been above 60. We're pretty much choppy and sideways. So this is not the market you want to trade unless you're doing intraday trading. You can look for the day trend and just trade the daily trend. But as far as higher time frames and overnight swings, it's not really a good trend to trade here. You're better off either going long the Dow for up or short the NASDAQ for going down. Moving on to the energy markets for the week of December 4th. We'll go ahead and take a look at those. Okay, time for you to get down. There we go. So, looking at the weekly chart of crude oil, still making that lower, well, actually, I'm sorry, we made a higher high, but are still pushing down to lower lows now. So we don't really have much of a trend. We did hold above 40 on the RSI, so it doesn't look like we're going to make new lows next week. Probably be a bit sideways. On the daily chart, you can see we've retraced a little, but now we're in bearish territory. So 84.72 may be the high of this week. We had that daily supply zone that we may make another run and then start to reverse. But I just don't see us making new lows this week. So watch for a bounce off this level. Could be a good short here for a swing trade to the downside, as long as we're not above 60 when we come into that zone. And then you'd place your stop, obviously, above the 88.05 or play the micros if you needed less risk. On the 4-hour chart, well, we've already seen our patterns follow through. We've come up and retested that area almost up to a 4-hour supply as well. Now, this is a little more bullish, so I think that, we do have that, again, that supply on the daily chart at 84.72. If we fail to go above the 84.72. It may be because we hit this 4-hour supply at 83.76 to 84.87. So you might have a better shorting opportunity there. But for us to get up there, we're going to be above 60 once again. So we need to have negative divergence, meaning when we come up and make another peak, it has to be below this prior high. If it is, where prices are making new highs, but the momentum is lower, then that'll be your shorting cue at 83.76 down to target at 75, basically. Moving on to Nat Gas, looking pretty weak. We had a really bearish week last week, and it was preceded by that big topping tail, so I kind of saw that it was going to be a bearish week anyway. In the daily chart, you can see we rallied up into daily supply a couple weeks ago, actually. That's where we started seeing that bearish pressure, and really we just continued. Now, the fact that Friday was so bearish, generally those are kind of overdone. We get the people chasing it, especially if we break new lows on Monday. We're likely to see a bit of a pullback first, maybe up towards the 7 area before we go and make new lows. Now, we could just see the bearish pressure continue, but I doubt it. Usually when you get this kind of a move where you get that large candle after a move down, you usually get a retracement. If there's enough bullish pressure, we could test this area as supply, which is about 7.3, 7.4. If not, then we just come up to the low 7 and then just drop again. But I'm expecting a little pullback to give you another shorting opportunity. On the daily chart, actually, it's not the daily. This is a 240, isn't it? I changed the label. I forgot to change the label there. It is a 240 chart. This is the target for your shorting opportunity. That daily supply is also here on the 6.890 to 7.213. So we may get a push up to that area since we've already been testing this demand. That's not necessarily a long unless you want to play counter trend. You could go long here as you leave the 6.335. It's additional risk. Target the 6.890, then reverse and go short there. First target would be 6.2, and then second target would be 5.7 right there. So I'm looking for more bearishness on Nat Gas. And seasonally, it's usually bearish in the month of December anyway. On to gasoline, you can see that we did try to come down, but we have not gone into bearish territory. So we may be starting to flatten out in this area of 220. That's what I'm seeing on the weekly chart, where you do have weakness, but it may not be weak enough to make a new low. Going to the daily chart that we're here, we did have a bit of a pullback, and our projections down now, if we continue this impulse, should take us to 2.1314. I don't really have a good place to get in on this time frame. You'd have to look at a lower, like the 4-hour. And on that 4-hour, there's a bit of an issue here because in late November, we made this high. So if we try to break that high, going into supply would actually kind of change the trend a little bit. So this is not really the best shorting opportunity because honestly, I'd really like to short here at 2.4365 to 2.4727. But again, it would take out the prior high for us to do that, and that kind of changes the trend on us. Doesn't necessarily put us into an uptrend unless we do that by making higher low first, then we make the higher high. So be careful there, but it does look like we are going to see more weakness coming in. We may pull back just to this 2.35 area. You can see the kind of drop-based drop. That may become the better shorting opportunity to target the 225 and beyond. On to heating oil. We're stuck in the channel, almost down to the bottom of the channel, but not quite there. We still have a little more room to go down to 3.0. So looking at this, you can see we've hit the demand, but we are very bearish. And we're coming back down again to try to test those prior lows. To break this demand, we really need to see more momentum to the downside on the next low. Current low that we're having. If we can make a fresh low with both the price and the indicator, then we'll crush and push through this 2.97. That's a tested zone. However, if we don't, then we could have a divergence that causes a little bit of a bounce, and that could push us back up to about 3.6. That'd be the next daily supply right in there. On the 4-hour chart, we kind of already missed the shorting opportunity. You see, we had this little zone, we rallied up into it and dropped away. So this may become a new zone right here. You see a drop-based drop. We only have one follow-through candle. We need one more candle to make a low on the 4-hour chart. If we have that, and then we retrace to this red candle, use the whole body of wicks, the whole range, but that would be your zone. And that's a good shorting opportunity for our targets again, 3.03. And then I don't have the daily further one. Thought I did. but whatever the next impulse would be. So probably around 2.8 on the downside. So moving into the stock market, we can take a look at the week and the sector performance. Taking a look at the last 6 months, you can still see flight to safety. We're still getting a lot of rallying going on here in energy, staples, and healthcare, which is what you normally see during a bear market. We do see a little bit of move in industrials. It's actually the number one sector. That's a little unusual for the markets right now in a bearish market. But overall, this is still pointing down. Looking at the last week, you can see that that was actually looking bullish because we're seeing the kind of cyclical securities, discretionary consumer communication services, technology coming out very, very bullish. But, the markets were going up, so that week was very bullish in sector performance, but overall, we're still looking at the big downtrend. That's what this is confirming for me. So looking at the past month's performance, again, very, very bullish. Not so much in healthcare, and you can see UNH, which was driving the Dow to the upside, starting to find a bit of weakness here. And we also have energy in the inflationary sector that's dropping as well. Tesla, well, it's going down too. Anyway, the past week, still same. You're seeing weakness there in healthcare, just a little bit in UNH and oil and gas. Also in some of the diversified banks as well. But the rest of the market was bullish and will continue as long as the Dow appears to give the impression the markets are going higher. If that Dow finds weakness because UNH finds more weakness, and that'll take the markets to the downside very quickly. So looking at the individual sectors in their rotation, consumer discretionary is just stuck in this sideways channel. You can see we tried to shoot out of the channel on the bottom side, snap back. Now we might try to make a run to the upside, but be careful. I think it would be a false breakout before we snap back into the range. If we do break above 150, I would sell. There's definitely supply overhead right here at 158 that could take you right back down to the 135 zone. So I'd be looking for some false breakouts here, but not a legitimate breakout, unfortunately. XLC, this one was a shorting opportunity we had been looking at before, hit our entry, hit our target, number one, and pulled back. Here we are again. It's not time to short again because now we've got too much bullish pressure. That's likely to take us through that zone. Believe it or not, the communication sector looks like a little more bullish than it has been. We got higher lows, higher highs, plenty of momentum to keep going. So there may be a breakout, retest, continuation, possibly up to wherever this little guy is, $56. On technology, XLK, we are stuck in a range that we did move up off our lows to my targets here that I was expecting and just stalled out. And right now, we did make a higher high in price. We failed to make that high with momentum, so that means we're likely to see a pullback down to the 128 area this week. Wouldn't be surprised. So intraday, look for some shorting opportunities in the technology sector in the stocks. As far as materials here, you can see that prices have been going up, but we've got a divergence now, and that means we're probably going to get a retracement. So we did move to the upside, hit our target. We're stalling out before the second target. And like I said, we should be expecting a bit of a pullback, probably to fill some of this gap. I don't know if it'll fill all of it. There's just too much bullish pressure, but it is suggesting a bit of a pullback, perhaps to $80 or $79. Energy has just been oscillating back and forth along this line, but I think we're leaving that. I think we're going to leave this trend line now, as you can see, where you're channeling sideways and consolidating. So the momentum is just completely dying off. And that's suggesting we're going to go sideways or even drift a bit lower. I wouldn't be surprised to see if we do pick up that we come down to about the $83 range. That's our next area of demand right there, about $83. The consumer staples have pushed up into supply, but we do have enough momentum to get through. However, we might get a little pullback first. You probably want to look at the 4-hour time frame to see a demand zone they might be able to buy for that pullback. But other than that, I don't see anything else here. But yeah, we've tested supply, too much momentum. We're going to break that zone. The trend is still up, and we're going to see more buying in consumer staples if the broad market starts dropping as well. Utilities are not getting helped because the interest rates keep climbing. They work on a lot of overhead margin, a lot of debt. So they issue bonds, and they really want low interest rate environments. We're in a high interest rate environment, so it's surprising that we've been going up this much. I figured the retracement was going to die off at about 38.2%. However, we're still in a bit of an uptrend here. We now have another divergence, though. And when we get those, and we didn't have that before, did we? Higher highs in momentum. Look at that. Now we have divergence. This may be the end of the move. So we couldn't close above 61.8. We closed pretty much at it with the red candle. Could be looking at a bit of a pullback here. There's nothing really to hold this up from going all the way back down to the 64 area here. So look out below. There might be some opportunities to short the utility sector. Financials, same picture. We have a move to the upside up to my target here. That was basically the duplication. Duplication of the previous impulse. But with the negative divergence, we're now on a retracement track. So I would be shocked if we don't retrace at least to 34.44, possibly 33.81 would be our target there. So look for that pullback and this trend line to kind of be snapped. In real estate, pretty much the same picture. We've retraced pretty deep, 61.8%. Got a nice divergence. We've lost our momentum now, so we're probably going to pull back to try to fill this open gap here to 36.50 to 37. Yeah. So I expect the price to come down a little bit there. Anyway, we were looking at Welltower as one of the real estate plays, and sure enough, it gave you another chance to get in. You can see we pulled back, didn't go below 40, didn't go below the stop loss, and last week hit our target number 1. So it's pulling back a little bit, and we don't really have, I guess we are diverging a little bit, but we made a slightly higher high here. We made a much higher high in price, but that's suggesting this little pullback might be done and we're getting ready to move up to target number 2. So if you got in, just adjust your stops probably underneath this green candle from Wednesday on the daily chart and just ride it out until it hits your target, or if you get stopped out. Now, for the trade ideas we were looking at Microsoft, and Microsoft has stalled out at target 1 and finally broke. So if you were able to have gotten in, the RSI was below 40, so we weren't going to make new highs right away. And that's what happened. We hit target, pulled back, but both of these little lows that were made, especially this one, this little low was made with the RSI very, very high, and therefore we were able to continue to make new highs. So we're going to keep pushing up, it looks like, a Microsoft to target 2. Again, if the broad market starts to slack off and drop, then we're probably going to fall down here too. But it really looks bullish. If the market's going up, this is one of the bullish ones that's going to rise to 270. Nike, unfortunately, never let us in. We were waiting for a pullback to buy at 98.63. Never happened. We hit our first target already. Now we're getting dangerously close to a daily supply of 116, so watch out for a reversal. But we're not there yet. You can see we did lose a lot of momentum, even though we made some new highs. There's going to be a pullback in Nike before we go higher. So you might have to look at, this is 60-minute. We could pull back right into this range at about 105 before we go back higher. That might be a buying opportunity too on the 60-minute chart. Then you target just getting out before 116, so maybe 115.25 be a good target if you end up getting long at about 104.50, 105. Was this Home Depot? Was another one that unfortunately never let us in. It just didn't pull back. We're getting a little divergence, so we're going to pull back at this point, but not enough to get in. At this point, the trade is done. Just don't get into it. Move on to something better. And Disney looked like it was going to drop and hasn't done so yet. You can see we moved into the supply, or gapped into it really, not above 60, so we started moving down, but we stalled out and started to rally with the bullishness in the market from Wednesday to Friday of last week. Well, we've made a slightly higher high here with momentum, but we didn't on Disney. Well, that means that even with more bullish momentum, we couldn't make a new high. That's bearish. So Disney looks like this short might be a good play come Monday. So I'm looking for a short opportunity. If we open up right in that 99.58 area or thereabouts, shorting with a stop at about 102, targeting 85.93, basically 86 you can call it, and then the next target would be 78. So Disney looks like it's getting ready to drop. And let's see, I think that was it. Oh, yeah, that's all I got for you for this week. So hopefully you enjoyed the video a little bit quicker this week. And again, we got another one next week that'll be recorded. And then we're going to do that live event on the 20th. So I'll let you know the time frame for that one. Actually, you can also let me know what is a good time for you. I want to make sure that people can attend. So hit me up at brandonwendell.cmt@gmail.com. Also, hit me up on Twitter if you want, at TraderBDub, and let me know what would be a good time to hold a live session, open Q&A. We're going to look at what's coming in 2023. And yeah, I can examine individual securities you want to look at as well. So hit me up and let me know what you'd like to see. Until then, trade safe, trade well, and take care, everybody.